what happens to your money after you put it in a bank? Do you really know? Most people don't. They just trust the system. But here is the truth. Not every banking system works the same way. And for Muslims, this difference is not just about money, it is about faith. Today, we are going to break down something important: Islamic banking versus conventional banking, side by side. No confusing terms, no boring lectures, just clear facts you can understand in minutes. Millions of people around the world use banks every day. They save money, they take loans, they invest. But very few stop and ask one simple question: is this halal? Is the way my bank uses my money allowed in Islam? You see, conventional banks run on interest. They call it profit. They call it markup. But in Arabic, it has one name: Riba. And Riba is not just discouraged in Islam, it is clearly forbidden. The Quran mentions it in 4 different places. The Prophet Muhammad, peace be upon him, warned against it in over 40 hadith. This is not a small matter. But Islamic banks work differently. They don't charge interest. They use contracts based on trade, partnership, and leasing. The money has to be tied to something real, a real asset, a real business, a real transaction, no shortcuts. So what does this actually look like in daily life? How does it affect your savings, your loans, cautions, your home, and your business? That is exactly what we are going to cover in this video. And if you stay till the end, I will share the most common myths people believe about Islamic banking and why most of them are completely wrong. Let's get into it. Before we compare, let us first understand how a conventional bank actually works. It is simpler than you think. A conventional bank does 2 main things. First, it takes your money. Second, it gives that money to someone else. That is the basic idea. You deposit your cash. The bank uses it, and it pays you a small amount for using your money. That small amount is called interest. Now here is where it gets interesting. The bank takes your money and lends it to other people. It charges them a much higher interest rate. So if the bank pays you 2% on your savings, it might charge someone else 10% on a loan. The difference is how the bank makes its profit. Think about it this way. You give the bank $100. The bank gives that money to a business owner as a loan. The business owner has to pay back $110. The bank gives you $102. The bank keeps the $8 in between. That is the business model. Simple. But here is the problem. This whole system runs on interest, and it does not matter whether the business owner makes a profit or a loss. He still has to pay back the full amount plus interest. The risk is only on the borrower. The bank is always safe. There is also no check on where that money goes. A conventional bank can lend to any business. It could be a halal business. It could be something completely against Islamic values. The bank does not care. Its only goal is to earn more interest. This is exactly why Islam says no to this system. Now let us look at the other side. How does an Islamic bank work? And what makes it different from a conventional bank? An Islamic bank does the same basic job. It takes deposits. It provides financing. But the way it does these things is completely different. The biggest rule is simple. No interest. Zero. Not even a little. Every transaction must follow Sharia principles. So how does an Islamic bank make money if it cannot charge interest? Great question. It uses real business contracts. These are based on trade, partnership, and leasing. Let me explain each one quickly. The first is called Mudarabah. This is a profit-sharing partnership. You put your money in the bank. The bank invests it in real businesses. If the business makes a profit, you and the bank share that profit based on a ratio you both agreed on. But if there is a loss, you bear the loss on your money, and the bank loses its time and effort. Both sides share the risk. That is fair. The second is called Murabahah. This is a sale contract. Let us say you want to buy a car. The bank does not give you cash. Instead, the bank buys the car itself first. Then the bank sells it to you at a known price with an agreed profit. You pay in installments. The price is fixed. It does not go up if you are late. The third is called Ijarah. This is a lease or rental contract. The bank buys the asset and rents it to you. The bank owns it. You use it. The ownership risk stays with the bank. There is also a Sharia board in every Islamic bank. This is a team of Islamic scholars who check every product and every deal. If something does not follow Sharia rules, it gets rejected. This is not just a label, it is a real system of checks. So the core idea is this. In Islamic banking, money must always be linked to a real asset or a real business activity. No empty loans, no gambling, no excessive uncertainty. Everything is backed by something real. Now that you understand both systems, let us put them side by side. This is where things become very clear. The first big difference is how they earn money. A conventional bank earns through interest on loans. An Islamic bank earns through profit from real trade, partnerships, and leasing. One is based on lending money for a guaranteed return. The other is based on doing actual business. The second difference is risk. In a conventional bank, the borrower takes all the risk. If the business fails, the borrower still has to pay back the full loan plus interest. The bank never loses. But in Islamic banking, both sides share the risk. If the business makes a profit, both share it. If there is a loss, both feel it. This is the principle of fairness in Islam. The third difference is how loans work. A conventional bank gives you money and charges interest on it. An Islamic bank does not give you money directly. It either buys the item for you and sells it at a profit, or it enters into a partnership with you, or it leases you an asset. The money is always tied to something real. The fourth difference is where the money goes. A conventional bank can lend to anyone. It does not check if the business is halal or haram. But an Islamic bank only deals with Sharia-compliant businesses. It cannot finance alcohol, gambling, or anything forbidden in Islam. The fifth difference is late payment. In a conventional bank, if you pay late, the penalty goes to the bank as extra income. In an Islamic bank, the late payment penalty goes to charity. The bank does not keep a single penny of it. And the last big difference is supervision. Conventional banks have no Sharia board. There is no religious check on what they do. But every Islamic bank has a Sharia board made up of Islamic scholars who approve or reject every product and deal. These are not small differences. They change the entire purpose and structure of banking. Now here is the part I promised you at the start. The myths. There are a few things people say about Islamic banking that are simply not true. Let us clear them up one by one. The first myth is that Islamic banking is the same as conventional banking, just with different names. This is the most common one. People say the end result is the same, so what is the difference? But think about this. Two pieces of meat can look exactly the same, but one was slaughtered with the name of Allah, the other was not. One is halal, the other is haram. The end result looks the same, but the process makes all the difference. In Islam, it is the process that matters, not just the result. Islamic banks use sale contracts, partnerships, and leases. Conventional banks use interest-based loans. The structure is completely different. The second myth is that Islamic banking is only for Muslims. This is also not true. Islamic banking is for everyone. It is based on ethical finance, no gambling, no excessive risk, no funding harmful businesses. These values appeal to people of all backgrounds. In fact, Many non-Muslims around the world use Islamic banking because they trust the model. The third myth is that Islamic banking is more expensive. Some people believe you always pay more at an Islamic bank. The truth is, in many cases, the cost is very close to conventional banking. Sometimes it is even better. The difference is not in the price. The difference is in how the transaction is structured. You are not paying interest. You are paying a profit on a real sale or a rental on a real asset. And that profit rate is agreed up front. It does not change later. So the next time someone tells you Islamic banking is just a label, you now know the real answer. It is not just about the name. It is about the entire process behind it. Let us wrap this up. Today, you learned something that most people never take the time to understand. Conventional banking runs on interest. The bank always wins. The borrower always carries the risk. And there is no check on where your money goes. It could fund anything, halal or haram. The bank does not care. Islamic banking is built on a different foundation. It is built on Sharia. Every transaction must be tied to a real asset or a real business. The risk is shared. The profit is shared. And a Sharia board watches over every deal to make sure it follows Islamic rules. We also cleared 3 big myths. Islamic banking is not just a label. It is not only for Muslims, and it is not more expensive. The real difference is in the process. And in Islam, the process is everything. Now here is what I want you to do. If you found this helpful, share this video with someone who needs to hear it. A friend, a family member, anyone who still uses conventional banking without knowing the difference. Knowledge is the first step toward change. Also, drop a comment below and tell me which part surprised you the most. Was it the halal meat analogy? Was it the charity rule for late payments? Or was it something else? I read every comment. And if you have not subscribed yet, now is the time. We make videos like this every week to help you understand Islam and money in a way that is simple, clear, and practical. Jazakallah khair for watching till the end. May Allah bless your earnings and keep them halal. See you in the next one.